And it's our job to understand that. It's our job to truly, our job isn't just to open doors and close deals, right? I mean, we'd like to think that is, and that's what really pays us at the end, but
Yeah.
it's our knowledge, right? The more knowledge you are, the more knowledgeable you are, the more people know, like, and trust you, the more successful you're going to be, right? If you don't know what you're talking about, that word travels fast, right?
Yeah.
Bad reputation travels quicker than good reputation.
Zach, what do I do when a video goes viral? How do I milk that for all it's worth?
Listening on the Zoom, go ahead and put down in the comments where you're from, and let us know if there's any questions that you have along the way. And it looks like we're being live streamed, so we're live. Welcome everybody. Johnny Moe here with my buddy David Childers from Keeping Current Matters, and this is where I get to sit back and listen and do the easy job while David has to sweat and be put on center stage and talk about the economical data of the real estate and mortgage world and what's going on, what happened last month, what's the experts are saying. And man, it seems like we're moving at lightning speed. Everything moves fast right now, except the timer when you're waiting for your coffee to warm up, right? So we're going to get into some of that good stuff, talking about it. That way you can be educated, so you can educate the consumer about what's going on with the economic data. And of course, what we're going to be talking about is national economic data on a whole snapshot. We always do suggest that you drill down to your local numbers, your local association, your local MLS always has great information there. Take the information we're talking about, try to replicate it on your local level at the same time, and paint an accurate picture. But anyways, enough with that dialogue. David, welcome. How are you, my friend?
Doing good, doing good. I always enjoy these Fridays we get to spend together, Johnny, and everybody that joins, see folks joining here, I know on the Zoom webinar and on Facebook. So just glad to be together. There's a lot happening, a lot to talk about out in the world of real estate, in the world in general. There's a lot to talk about. So that's what we're going to try to do, is break that down. So Johnny, here's what I thought. When we were together a couple of weeks ago, we did talk about home prices. There's been a lot of updates to some forecasts and things like that over the last couple of weeks. So I brought those relative to home prices, and maybe even as we're talking here in the chat, if there are particular questions that are on your mind, put those in the chat relative to what people are asking you, or questions or things you're struggling with or just wondering about. I'm not saying we can address all of those today, but if you give them to me, I can take them back to our research team, and maybe next week or at some point we can. But if we do have the answers, then Johnny and I certainly can do that. But we'll talk about home prices and the movement there relative to forecast. And then I want to talk a little bit about what's ahead. What are experts saying about next year, even beyond home prices? What's on the horizon? And at the end of the day, Johnny, I think this is so important to remember. Nobody has a crystal ball. We're going to talk about what people are saying, what's out there. But I would encourage you not to try to put yourself out there as the one that knows exactly what's going to happen, because nobody does. All we can do is say, hey, here's what we see people saying. Here's what I know about our market. You mentioned that, Johnny, bringing the local market perspective in. And here's how I'm going to help you make a wise decision relative to the home you're purchasing, the home you're selling, whatever the case may be. So I think that's our job right now. It's always our job, but it's certainly in times like these.
It's our job, and it's our job not only to bring data and be educated and sound like an expert. It's also our job to de-escalate, make your client feel comfortable, your prospect feel comfortable with knowledge. And I think the more knowledge you have, the more tools you have, the better off you are to have that conversation with people.
Yeah. I think you're right, Johnny. I think it's also important too. I'm going to add another person into the mix there, Johnny, for the client we're working with. It's important for us.
Yeah.
Well, I think there's a lot of agents today, and here's the question I would ask. I can't remember if we talked about this last time. What's the story in your head about this market? What are you telling yourself? you know, because I think having the facts and having all this information and being able to say, okay, here's my plan versus a lot of people going, I don't know what my plan is right now, you know?
Yeah. Listen, I think a lot of people are scared of the rates because, you know, just like they're scared of asking for their commission, right? That fear is always there, that rejection, that uncomfortable conversation. And this is simply what I say. Either the numbers work or they don't. And that this is my approach with people is, hey, either the numbers work or they don't, right? It's a moot point what the rate is, because the rate is what the rate is. Right? You ain't going to change it. Maybe you can buy it down, right? But I have watched some people get priced out of properties recently and stuff like that. So there is that impact. That's what I'm saying. Either the numbers work or they don't. It is what it is. And what is it? What are we seeing?
Yeah, I think that's a brilliant point. There are folks that are priced out of this market. What we're playing for right now are the people that are scared or don't know what to do, aren't sure they should do something. So let's hop in there and let's talk about this question relative to home prices. You know, I grabbed this slide right here, a lot of question marks over what's happening, what will happen with home prices. Now, when we were together 2 weeks ago, Johnny, I brought you the forecast. There have been changes in those forecasts. Every time that happens, I'm always going to bring those and say, okay, look, these forecasters have given us some different numbers, and here's what that looks like. And I would encourage you to do the same thing too. Be the one that brings that information to the folks that you serve. And I'll kind of start here from Redfin. There was a quote from Deputy Chief Economist there. For those bearish folks awaiting home prices to crash, you'll have to keep waiting. As much as demand is pulling back, supply as well is reducing the downward pressure on prices in the short run. The median home price was up 7% year over year, 5% growth in August. So they're giving a little bit of information in the rearview mirror there relative to home price growth. But the bottom line is, more and more people are saying we're not going to see a crash. Now the ground may shake a little bit. We may go through some times that we go, okay, what's going to happen here? And I'm going to talk about that in just a minute, but not a crash. And one of the reasons for that is there's been a little bit of pullback on supply coming to the market. We've talked about those that have a low interest rate, maybe rethinking, do I want to trade up or do anything right now when I have such a low interest rate? Certainly that impacting it. Uncertainty certainly impacting people putting their homes on the market, but we don't have this overabundance of inventory on the market that when we get into that scenario in the past, starts to drive prices down. So that keeps upward pressure on prices. So what are experts saying about prices? I brought this last or 2 weeks ago when we talked. This is the latest forecast for 2023 relative to home prices. We took Freddie Mac off here because they haven't updated theirs, and truthfully, they were at 4%. I don't think it's accurate. I think they'll come up with an update. We'll add it back here. All of these forecasts, Johnny, going into 2023 have been updated in the last 30 days. Okay. Biggest change here, Fannie Mae now calling for 1.5% depreciation in home prices in the next year. You see Mortgage Bankers Association Home Price Expectation Survey, NAR, still calling for appreciation. Now we have Ivy Zelman and Fannie Mae calling for depreciation. The average, if you average all those out, 0.2%, flat growth, I'll call it, in residential real estate going into next year. And that appears to be kind of the best case scenario right now. So if we want to start to look at this, I want to break down a couple of things that really become apparent. And I'm going to move kind of to what banks are saying right now. So this is this look that we always have from Keeping Current Matters, where we average out and look at what everybody's saying. I always say, the ones that say, call for depreciation are going to get the most headlines, but not everybody's calling for that. And we'll continue to watch it. Okay. What are banks saying? This is where it gets interesting. Goldman Sachs, Wells Fargo, Moody's, Morgan Stanley, all calling for depreciation, anywhere from 3 to 5% plus. Now, what becomes interesting here when you start to look at forecasters, they sort of take two different paths. Those that focus on existing homes generally right now are forecasting appreciation, albeit very, very little. I talked about growth next year being flat or anemic, very little growth in housing. Those that focus on builders and maybe publicly traded builders like these banks, forecasting depreciation. No doubt builders, tough road to hoe, building homes and trying to sell those homes, price reductions, things like that. But that's becoming a clear distinction. What is also becoming a clear distinction, I'll use kind of the Wells Fargo analogy, but I think it's true across a lot of these forecasters, is they're calling for this depreciation going into next year and then for recovery going into 2024. Okay, so in the next 12 months, we talked about this when we started, the best we can do right now is look at forecasters and say, what are they saying? Here's what's happening in our market. Here's what we believe about supply, demand, prices. If we're in an overheated market, we have to take heed of this. This is not the case in every market across the country, and we have to pay attention to that. But clearly, the market recovering going into next year based on some of these forecasts. Now, here's where this is important. Going back to the point, Johnny, that we talked about before. This is a quote that I pulled that I think is so applicable right now. And it comes from Lynn Kiefer from Freddie Mac, and he said this: while there might be little statistical difference between a small positive number or a small negative number, there are often huge differences in how they impact behavior. So whether homes actually appreciate 1% or depreciate 1%, not really a huge difference. Now, we don't want homes to lose value. We don't want anybody to lose money, all of those things, but not a huge difference. But the big difference they have are on our mindset. Those of us in the business, you're thinking about buying a home and all you hear is homes are losing value. That's really what's at stake right now, is the differences in how this impacts behavior. I think right now we're in a place where, I gave you kind of the best case scenario for, flat growth, somewhere between, very little growth to very little depreciation, I think nationally. And most of that being tied into, next year. We're going to talk about, kind of after that, what do we see coming here in just a minute. Here's what I know for sure. And this came out from Ivy Zelman. During the global financial crisis, home prices depreciated for 5 years. I don't see anybody calling for that right now. I don't see anything like that. That's been the fear, like 2008, is this going to happen again? We've talked extensively for the last 2 years on a number of subjects, Johnny, whether it be prices, whether it be foreclosures, whether it be inventory or mortgage credit availability. When I look at this and you look at the depreciation that happened during 2008, nothing like that being forecasted for the coming, sort of year. A little bit of depreciation in what forecasters are saying going into next year, but then as we move into the year after, that not being the case. So I'm gonna stop sharing for a second there, and that is probably the biggest change that we've seen the last couple of weeks. Really seeing forecasters sort of switch their nod to, we're going to see a little bit of depreciation or very little, a little bit of depreciation, very little appreciation in residential real estate in the coming year.
Oh, well, that's good for me because I plan on adding to my portfolio next year. That's the goal. So come on down, right?
Yeah.
But again, it's going to come down. It's not like anybody's losing money, because coming down from what? Right? We're coming down from a number, which is a benchmark, which was created, but that doesn't mean, people will look at it as, oh, I could have got 400 last year. I can only get 380 now. I lost 20 grand. No, you didn't lose 20 grand. You have to look at where you were and where you are and how much did you make, right? So I'm glad to see them in a way adjusting their outlook. I think it's accurate and I think it's updated. I think there was a lot of false hope being put out. People were like, oh no, it's still going to appreciate 5%, this, that, the other thing. I do believe that we're going to see, I don't, there's a lot of factors that we can't take into consideration and we don't know until they happen what that looks like. However, I don't think that the factors, again, we talk about this probably anytime there's any hesitation about pricing, the factors that existed back in 2006, 7, 8 that caused that don't exist. Right. I do think that we're going to, and I had lunch with somebody or breakfast yesterday with somebody and said they're starting to see the emergence of some people. We talked about forbearance many times, but some people that weren't able to make it up, or people that are starting to get into default or difficult situations, or, the pipers come due and you got to pay the piper. So I think we'll see those situations. We'll probably see some more of those situations. Jobs are a big thing, right? We're in a unique time where the economy is weird, right?
Yeah.
Like nobody's filling these lower paying jobs. These higher paying jobs are still moving. Things are costing more money, but it's almost like we're just in a pause, right? It's almost like we're in a pause. But housing, I don't care where you are, Maine, New Hampshire, these are my markets, right? Massachusetts, they're still moving well, right?
Yeah.
Yeah, you might not be able to price gouge. You got to be a little bit more realistic. And I think this is where being I want to say a good agent, but a thorough agent is going to come in and really, you're going to have to control the situation on pricing. If the house is worth 700, it's worth 700. It's no longer worth, all right, we're going to put it at 750, right?
Right.
And get it. So, but again, that's different areas, right? San Diego might be a different market, right?
Yeah.
Silicon Valley might be a different market. Florida's going to be unique. It's always unique, right? You just lost a whole bunch of homes. As tragic as that is, that takes away the supply from the supply and demand.
Yeah, I think you're right, Johnny, that the differences in markets is going to be there. I mean, the last couple of years, we pretty much said every market's, going up, and that was the truth. And so there's going to be some difference market by market. And I would ask that question right now. If you feel comfortable, tell us what you're seeing in the chat in your market. What are you seeing happen right now? I think there are a couple of things. One thing I think we talked about last week or 2 weeks ago when we were together is this concept of downside sticky. You'll hear that continue to come up over and over relative to home prices. And what that essentially means is if the home is not forced to be sold, prices hold. Right? If somebody puts their home on the market and they can't sell it for the price they want, they may take it off unless they have to sell it. That's when any time in real estate, when do you lose money is when you have to sell, right? You never want to sell when you have to sell. You want to sell when you want to sell. And so you're going to hear that term downside sticky come up more and more relative to home prices. Second thing, Johnny, talking about the, folks being in trouble and maybe coming out of forbearance or anything really in that matter. That's a fact of real estate. My hope is, and I don't know if you have any in the conversations you were having, any conversation there, folks today, by and large, should have equity that they can tap into in their home and not have to go to a sort of a bank transaction, some type of distress transaction, whether it be, whatever the form of it may be, they can sell today. And that's where I think that'll be inventory. I don't think it's going to be a massive amount of inventory, but there will be those that go through that.
I think so. It's just the way that it is. Right.
Yeah.
It's just the way that it's always going to be. You're going to have a whole bunch in the middle that are going to struggle. You're going to have the ones on the fringes that don't. But the thing is, all those weird loans just simply don't exist.
Well, not only do they not exist, Johnny, they've been out of the system. Mm-hmm. So there were some that existed in 2010, 11, 12, but all that's out of the system. And I think that's important. So let's maybe turn our attention to what's ahead. Well, let's
take a look at that. What's ahead?
What folks are saying about what's ahead. So I want to give you that picture here real quick. And I think that is a question many folks are asking right now. What is around the corner? And maybe that's where some of the fear comes in. And, I don't know what interest rates are going to do. I don't know what prices are going to do. So first point here, Mark Fleming, with mortgage rates expected to continue to drift higher over the coming months, much of the rapid increase in rates is likely behind us. Let's hope Mark is right there, that the rapid increase in rates is behind us, but he's calling for rates to drift a little bit higher. If you think about this, all this is about inflation. Johnny, we were talking about this before we went live. Inflation is bearing down on just about everybody in this country, and certainly didn't get good news on that yesterday. And it's not going away tomorrow. That's what I know. Mark goes on to say, nationally, while month over month house prices may decline, annual house price declines are not expected. He's not calling for depreciation at this point, given the ongoing supply-demand imbalance and continued strength in the labor market. Mm-hmm. So if we look at what Mark's saying there, that is, sort of his take. Expect rates to drift a little higher, in his words, rapid increase behind us, and let's hope that. But this battle is about inflation. So Fed's going to do the work that they believe they need to do to tame inflation. And what are you going to hear as a byproduct of that? More and more people calling for a recession. And just last week, KPMG, the large consulting firm, came out and said global CEOs see a mild and short recession, yet optimistic about global economy over the 3-year horizon. And they go on to say more than 8 out of 10 anticipate a recession in the next 12 months, with more than half expecting it to be mild and short. Well, okay, we're gonna hear that, that call for recession be sort of get to this fever pitch. And we've talked about this, Johnny, many times, whether 2 consecutive quarters, National Bureau of Economic Research that technically calls a recession in this country. No matter what you believe or think about that, you'll be told when that is the case, well, what do we know about recessions in our business? We know that a recession means falling mortgage rates. You go back to the early 80s, and every time there's been a recession in this country, we've seen the average mortgage rate fall. So I think as we start to guide people forward, we can bring them this advice. Okay, this is what I see happening. Do you want to wait? Do you want to buy now? Do you want to sell now? How do we help them make the wisest decision based on
Do the numbers work or not?
Forecasted? Absolutely. So let's talk a little bit about even beyond that. And I'll bring in a quote here from Wells Fargo. And they say, if our forecast for Fed rate cuts is realized, so imagine we go into next year and the Fed starts cutting rates, mortgage rates are likely to fall slightly, just as cooling inflation pressures boost real income growth. A modest improvement in sales activity should then follow, which will reignite home price appreciation heading into 2024. So Johnny, I talked about before the forecast of, hey, we'll see things be a little bit rocky going into next year, but then should see things turning the corner going into 2024. Certainly that's speaking to that. Pulsenomics agrees with that. They say this study just came out. Experts expect the housing conditions to shift in the favor of buyers by the end of 2023. 44% saying 2023. So, as you start to look forward, that's certainly information for those that are buying. They want to have in their back pocket as they're out there looking. Also, Freddie Mac came out with their housing sentiment study. As of the third quarter here, this is of homeowners. 46 are confident the housing market will remain strong over the next year. That's certainly good news. 16% of homeowners are likely to sell in the next 6 months. So we'll call that 1 out of 6 likely to sell.
That's ridiculously great. Thinking
about doing something. Yeah. So if you knock on 5 houses and don't get an answer, go to the 6th one. That's the bottom line. 19% of homeowners are likely to buy a home in the next 6 months. That's 1 out of 5. So it's not all doom and gloom out there. There's certainly folks that, through need, through necessity, through a life event, whatever the case may be, are thinking about transacting real estate in the coming year. And I'll wrap up with this quote, Johnny, because I think it's super important right now for us to remember. We started off talking about just, the story inside of our heads, and what are we not only telling people, what are we telling ourselves? Jason Lewis from Parcel said this: in the absence of trustworthy, up-to-date information, real estate decisions are increasingly being driven by fear, uncertainty, and doubt. These decisions can be hugely consequential for consumers and businesses. And I don't think I could have said it better than he said it here. This is an important point for us in the business, for everybody that's thinking about transacting, buying and selling real estate in the coming year, that they're increasingly being driven by fear, uncertainty, and doubt. And what do we know we can help them with? Overcome that. Not to sort of have our head in the sand and say, no, don't look at anything. No, let's bring the facts. Let's talk about it, and let's help them make the wise decision.
What's the interest rate on rent?
Yeah. And that's the real crisis in this country right now, is rent.
Right. It really
can't buy, have to rent. Yeah.
Mm-hmm. I'm helping my kids transition to adulthood, and we're looking at rentals that are out there and everything, and I'm like, God, I'm glad I'm not you.
Yeah. Yeah. I think knowing that, Johnny, knowing what a 2 or 3 bedroom apartment or home rents for where I'm at is critically important today to bring perspective.
I think it's vital, and the supply and demand, right? And the supply and demand of that market. And it's our job to understand that. It's our job to truly, our job isn't just to open doors and close deals, right? I mean, we'd like to think that is, and that's what really pays us at the end, but it's our knowledge, right? The more knowledge you are, the more knowledgeable you are, the more people know, like, and trust you, the more successful you're going to be, right? If you don't know what you're talking about, that word travels fast, right?
Yeah.
Bad reputation travels quicker than good reputation, amongst the grapevine. But out there on social media, you should be taking this information. We talk about it every time. You should be making videos about it. You should be talking about it. I gave an idea to a group of people the other day, and this is what I'm going to be doing when I transition up to Maine, because I'm going to focus on investment properties. That's it for my own portfolio and some others. Is I'm going to be popping up properties on the screen and talking about, this is a 3-family. This would make a great owner occupied. If you the rent on this would be the mortgage on this would be $2,500 a month. You'd be able to collect $1,200 and $1,000. You'd be living to next to nothing. What's the ROI on that? You live there for, right? You have these conversations. You're like, oh, this is a 4-family. You're going to get $1,000 from each unit. There's 4,000. You're into it for $2,500 each month. There's $1,500 net each month. Right now, you can start to have these conversations. Why? Because the people that want to buy these want to know that you know what the hell a cap rate is, and you can figure it out.
Right.
Yep. It's the same thing. It's the same concept, different process, different product. Right. Yeah. It's the same thing. You want to work with the consumer. You want to work with first-time home buyers. Be smart and educated. Give them the confidence to make their decision. Right. Are the houses going to go down in price 10, 5, 10, 15, 20%? I don't know. But rents aren't, not right now. So, I mean, how much money do you lose by paying rent?
Yep.
So these are the tough conversations. And I say it, and I know I sound harsh when I talk to agents and pick on them a lot. I mean it with love. It's tough love, right? But you got to be more than a yes person. You have to be more than an order taker. You have to be that educated person with the C word, confidence, to be able to bring in and have these conversations, right? Yep. And be able to say, hey, listen, prices might go down. We don't know. We don't have a crystal ball. Rates might go up. Does it work for you now? If you go back and you keep paying $2,500 a month, what's your benefit from that for rent? Yeah. None. Right. So no, have these hard conversations. But to me, I don't think, David, there's just nothing in here for me to worry. Of course, I worry about the economy on a global level, quite frankly, a lot of weird things happening. But today it's fine. The thing is, people buy and sell homes in every market, every day around the country. You just have to determine who is going to be the agent that is working with them.
Yeah. Well, let me respond to that. I don't think there's things in here that necessarily we need to be panicked about. I think when people do panic, it's because they don't know what's coming.
I don't know.
We're heading into Halloween, right? You go into a haunted house. Why does that scare you? You don't know what's coming, right? And we can help people. We may not be able to say, okay, this is exactly what's going to happen, or here's my crystal ball. I think that's a failing proposition. But we can say, here's what's likely to happen. Here's what experts are saying. How do I help you make the best decision?
It's like this, right? You're not feeling good. You're checking out your symptoms on WebMD. Next thing you know, you get diabetic gastroparesis. So you're going into the doctor with all this fear and everything. The doctor's like, now you just have a virus, right? It's the professional's job to put you at ease. And I think that it's our job to put the consumer at ease, not through lying, through education. I created this. This is what got my training career launched in 2013. I created a set of principles called UPAD: understand, plan, action, and discipline. So understand the data that you have, understand what's happening, understand where we're going. We're not going off a cliff, right? So don't let anybody believe that we're going off a cliff. The best time to buy was 30 years ago. The second best time is now.
That's right.
Yep. It's all Klein.
That's good.
Right. What else we got? Anything?
That's what I got. No, I think we're at the bottom of the hour here. Just get out there, make a video, do something with it. Take this information out to people that need it. That's our job now.
That's it. That's all you have to do. Let me just check online. Any questions? Love this session, guys. It slowed down a bit, but things are still selling well. That's our leader, Tristan. Thanks for chiming in, Tristan. It's slowed down a bit, but things are still selling well. And listen, I want to take that and just twist it up a little bit. Y'all been spoiled for 3 years. So what you're experiencing now is what we call a normal market, right? So there's no reason to panic. There's none, right? There's, it's excellent for FHA and VA buyers, right? Because maybe now their offers are being taken a look at again.
That's a good thing. That's a great thing.
Right. So maybe your marketing changes just a little bit. Hey, VA buyers, now's your time, right? Hey, FHA buyers, now your time. Learn your products, right? To me, it's all about education. It's all about self-education. And this is part of the education that we need to relate to the consumer. Anyways, if that's all you got, how do people get this information, David?
You can go to trykcm.com and start a free 14-day trial. If you haven't done that already, go and do it. I think you're going to need good information over the next, several months, next year, and we want to provide it for you. So
and make a reel with it, make a short with it, make a TikTok with it, make a long form video with it, and be seen. Be seen, be heard, be respected. Anyways,
awesome.
On behalf of the CMO of Success Magazine, Tristan and LabCoatAgents, and everybody here, David, thank you for being here. Everybody, thanks for being here as well and listening. It's because of you that we keep going and doing what we do. So go to trykcm.com, get your 14-day free Keeping Current Matters subscription. Go through all the information. Use it to your advantage. Make a video, make memes, make screenshots, right? Do something with the data. Anyways, thank you all for being here. We'll see you again in 2 weeks.
Take care.
Bye, everybody.